The Trader's Edge with your host, Steve Rhodes.
Hi, everyone. Basil Chapman sitting in for Steve Rhodes. What a great lead-in that is. And, of course, you know that Steve is always here talking about what inspires him. And he has a picture, certain rock in Hawaii. I have a rock, but I haven't got a picture of it. I'm showing here live TV, TV1. You can see a picture. I was born in Cape Town, South Africa. And the chart and the picture I'm showing here shows, you see this oval that was built for the international soccer, the soccer. What was that? 2 years ago, was it? For the huge international soccer event. Now what's going on? That wasn't even there. There was a little what they call the oval when I was a kid growing up there. And what was interesting is that this is, in the background is Table Mountain. It's got a flat top to it. And there's Lion's Head and there's Devil's Peak. And what is fascinating about this place is that it is relatively small it was the World Cup, of course. It's a relatively small area because it's a peninsula that projects out. Now, it is not the very tip of Africa. The tip of Africa actually goes a little lower, but it is where the Atlantic Ocean and the Indian Ocean meet. And if you had to go all the way back, right down there, I'll show it in a moment, you get to a spot called Cape Point. Well, all the way along, there are some spectacular beaches. When I was a little kid, my father, he and his brothers had they inherited from my grandfather a joinery manufacturing company. That was a company that made just the finest woodwork, everything that was wood. In fact, I still believe today that in Cape Town, the old Mutual, some of the old buildings that are still there have the woodwork that my family did for the doors and the windows. Now, what was fascinating, I used to go with him on a Sunday afternoon to check to see the lumber that would come in from the Scandinavian companies, which he loved to use. And that was just top quality. This is a company, I know Steve likes to talk about just the best of the best and striving for the best. And this is what my father's factory used to do. They were the Rolls-Royce of woodworkers. And I used to go with him on a Sunday afternoon. We'd check out the wood, and sometimes we'd go on a tugboat called the F.T. Bates, because the actual entrance to the harbor is very deep, but the entrance was quite narrow, and the tugboats used to push the ships out through the narrow outlet and bring them in. So I used to go with him, and we'd go on the tugboat, and we'd do that. It was really something that's always stayed with me. And the other thing is that along the coast here, on the one side is the Indian Ocean, the other side is the Atlantic Ocean. And if you go down to the very tip, I wonder if there's a picture here. I'm just picking, I arbitrarily went to Google and I picked this. Well, let me talk about this for a moment. You can see here, the reason why the mountain is called Table Mountain, and there's a beautiful cable car that goes all the way to the top for a spectacular view, especially at sunset, is that when the clouds that you can see right here, if you're looking at TigerTV, that cloud comes over the mountain, and in fact, when you're standing on top, the cloud it's almost as if you can raise your hand and touch the top of the cloud, because it's just above it, so that it doesn't go to the ground. There's always about 6 or 7 feet, or maybe 20 feet, and then it curves right over. And we lived in Sea Point, which is right, if I can show it right here, right over here, on the side over there. And if you could see through the gap between Lion's Head and Signal Hill, if you could see Table Mountain and you saw this cloud cover go a certain way, you knew that there were storms coming. That's number one. Number two is this little enclave here of Sea Point didn't have bad weather. There could be horrible weather all over the show, winds and everything, and it was very sheltered. So it was something special. And you could also, from my bedroom window, I could see Robben Island. It was not a prison where Mandela went at the time. It was just an island. It was just, nothing was there, in fact. And in fact, right from this particular point over about here where my arrow is, that's where I think it was in the fall, maybe 6 to 10 swimmers would put seal oil on them and have a race to swim to Robben Island and back. Freezing water. So I thought I'd mention that. Steve loves his rock, and I love this view. I've not been to South Africa for probably about 7 or 8 years, but it is an exquisite place. Just really a beautiful place. All right, let's get to the market. Why? Because Tom and Steve are out. I'm doing Steve's show, and they are doing their Go Long America tour, Denver, Spokane, San Francisco, Boston, and they're in their first destination today, and I'll get more of the details in a moment. But there is still time to sign up to have the pleasure and privilege and to get the information, just the fantastic information that they impart at every one of their webinars or meetings. And in this case, it's a 3-hour or 1.5 hour programs they've put together. So now let's go to the market. The Dow closed at 12,949, making a new recovery high on Friday. That in the chat, I'm not going to go into the details right now. Maybe I will a little later on. But right at this moment, what I am going to say is that new high essentially recycled another leg to the upside in what I call the Chapman wave. My service is the opening call here on TFNN, and I have my show is Monday, Wednesday, Friday at 11 o'clock till noon. Just like this is a call-in show. 877-927-6648. That's the number to call. Now let's look at this. I use certain technical indicators. For those of you looking at TigerTV, let me make this a little bit bigger so that you can really see what I'm looking at. You will see that green bar broke above the previous doji high of 12,924 in the Dow. It is above the white line, which is the 9-period moving average. You can see that this red line here is a base of support. The green line is resistance. It is a narrowing, rising wedge coming to an apex, number one. Number two is that when you look at the vertical lines, and those vertical lines when the Dow was at 12,841, showed that the Dow had pulled back just a little bit to 12,529. But the MACD, the moving average convergence divergence, this yellow line is the fast moving average of the MACD, and it's called the MACD, M-A-C-D, and the red line is the slow. Now, this fast moving average differential, 9-period differential, the yellow line, pull back sharply, just as the slow stochastic did, the red and yellow lines here, fast moving average, slow moving average, and this is the slow stochastic, pull back. The price held the support line and then rallied again with the technicals, except that the MACD failed to cross positive. In fact, it deflected, the yellow line deflected lower. But look what happened. If price is the arbiter of movement, you can look at all the technicals you want. I don't care what the technicals are. If the price is moving higher, what's happening? The price is moving higher. If the price is moving lower, what's happening? The price is moving lower. The technicals are there to give you some kind of reading as to the internals, the machinations, what's going on, how does it work. And in my case, if you had asked me and said at this little dashed vertical line that you can see here, the Dow was at 12,841, blocked everything out and said, what do you think the price is right here where the MACD is much lower and the stochastic is lower? I would have said there's a good chance that the Dow is at about 12,700, 12,600, just based on the technicals. But there are other things that are very important. The look-back period, the 9-period exponential moving average, which is so important to my work, shows that the price basically was holding only 1 day since it broke out, since the Dow broke out from the doji close of the 31st of January. From that day on, only once did the 9-period moving average be broken on a closing basis by the Dow. And that shows internal strength. As it stands right now, this green line here, this little wiggly line, is showing me that it's making a peak A, B, C, D, and this is leg E up, just like the Dow is making a leg E up in the the Chapman wave to the high of Friday of 12,967. But there's one thing that's, for me, really important. This fast-moving average of the MACD is turning up, but it hasn't crossed positively. It says one of two things. Now, of course, you always have one of two things when you're looking at the market. You're either going to go up or you're going to go down. There's really no such thing even as sideways, because if you went to a 5-minute chart or a 1-minute chart, you'd still be having a big price movement. So basically what we're looking at here is if the Dow manages in the next 2 days to pierce the 12,990's resistance and power into the 13,000. Can you believe I'm talking 13,000? We are double from the lows of March the 6th, 2009. This is a major bull market. It doesn't matter what anyone says. This is a major bull market. You don't get 100% gain without it being called a bull market. It can change, but that's what it is right at this very moment. But unless the Dow breaks and snaps to 13,050s, we got to watch two things, and I'll talk about them as soon as we get back, and we'll run through the numbers. Basil Chapman sitting in for Steve Rhodes, 877-927-6648. We'll be right back with Paul in Boston.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
And we're talking about, earlier on I was talking about excellence, and what I wanted to say was talking about South Africa, just the scenery, the topography of Cape Town, how spectacular it is. Just I was born there. It's just one of my favorite visions that I have in my mind, because Steve always talks about the rocks that he has, and I personally have my favorite rocks in Clifton Beach. I don't know if I've been able to get to that a little later on. I'll show the pictures, but just quickly before we go to our callers, the Dow, which is about to open in a few minutes, is at 12,949. What it needs, I'd say, either two things. It can go up or down, but that's not the point. The point is that if the Dow manages to break into the 13,050s, I'm to see tremendous resistance across the board in a lot of shorter-term stocks. That's the Dow, the S&P, the IWM, the cyclicals, the IYC, that's consumer non-cyclicals, the what am I missing? IWM, the Qs. So unless the Dow is able to spectacularly power, I'm talking about the Dow because you can talk about the S&P, anything. I'm talking about the Dow because it's what I follow. I followed every minute of every day for the last 20, 30 years. Because if it breaks into the 13,070 to 13,090 area, the tide. I'll be doing a webinar on the 29th of a week from tomorrow night. Wednesday night. A free webinar is open to anyone. I'm going to be explaining the core of the Chapman wave, the waveform, how you get it and why it works and what it does, how many times you can go to a peak D, just as the Dow monthly went to a peak D back on in May of last year, and then pull back from the, it's a bit messy there, 12,876 area down to the 10,404 area. That's a pretty big hit from a peak D, the fourth highest peak. It's just a simple technique. I'm going to clean everything up in a moment. But what I'm looking at is I have no choice right now but to call this new leg B, even though it's a potential double top V-shaped formation with a right side price time match in the weekly, leg B rather than some kind of strange FY because it went to 10,404, which is a pretty deep pullback, and the recovery is the stochastic and MACD holding really well. So either the Dow has to climb, it has to get to 100, about 130 points higher with a close at that level to really break the resistance and show this is a powerful move that's not going to stop, or we're going to get a high-level consolidation because we failed to make a new high today, and instead the Dow reverses and closes more towards the 12,870s. Let's go to our first caller. We've got Paul in Boston. Hi, Paul. How are you?
Hey, your talk on South Africa was very interesting.
Good. Thank you.
I wanted you to look at Rite Aid, R-A-D.
You know, this is fascinating. I'm so sorry that I've lost some of the charts that I'd notated from years back. I followed Rite Aid. R-A-D is the symbol, as Paul says. This is a stock, folks, that was once upon a time. Oh, I wish I had all my notation. I had this so perfectly notated. It went to a doji top. I'm going to be talking about this sort of thing in my webinar coming up in a week's time. And let me just quickly do this. It went A, B, C, D, E, and F. Now, F is where you get your most powerful declines if the MACD and stochastic are fading, which is exactly what happened. And that doji high in January of 1999 saw it go from 51.13 straight down over a period of 2 years down to $1.50. Well, no. $1.50 is nothing much because it still went down to 0.27. Right in the 20-cent range. Now, what was fascinating for me is that I distinctly recall the CEO, I can't remember her name, being interviewed. I think it might have been Kramer was interviewing her, and she said, we've turned things around. It's been a tough time. Everything's on track to move higher. I don't remember what the price was. Maybe it was on its way. I know it went to another very high peak, and when she spoke, it was just after that. And at $9.99 in June of 2001, that's when it plunged down to its lowest level. Of 2002 to 1.65, ran up again to 650 before coming all the way back down. So this is a fascinating thing, because there was a perfect peak D in the monthly chart from November of 2005 at 323. You just count each successively higher peak, and what do you get? You get to the fourth highest peak at 674. Once again, the technicals fail, and it comes plunging down to that low that we were talking about. Wow, is that the music I guess I'm not used to? Oh, 20 cents was the low. Now it's had a very nice rally to $1.60. I think it's worth talking. We'll be right back straight off this with Paul and John.
Well, it's always better when we're together. Yeah, it's always better when we're together.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. TFNN has an exciting announcement. As part of our Go Long America contest, Tom O'Brien and Steve Rhodes will be hosting 4 live in-person workshops that are absolutely free to attend. Denver on February 21st, Spokane on February 22nd, San Francisco on February 23rd, all from 6:30 till 9:30 in the evening, followed up by Boston on Saturday morning, March 3rd. Steve Rhodes will show you how to understand the power of 1% and how to master probability, along with avoiding getting stopped out of trades early, while Tom O'Brien will speak about the intense trading power of Tiger Gartley and butterfly patterns. All of these workshops are completely free to attend. Come see Tom O'Brien and Steve Rhodes live at one of these free workshops as part of the Go Long America Tour. For more information and to reserve your seat today, visit the front page of TFNN.com and click on the Go Long America Tour banner.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
980. You've got the S&P. Let me just run the numbers right here. In fact, you know what I'll do so that you can see it live and you can see how these charts work in the Chapman wave. You'll see that the Dow, INDU. And what I wanted to mention, before I forget, is that the weekly chart of the Dow and the S&P, all the weekly charts are just looking fabulous at this particular point. So what happens with the dailies is going to be very important. But the Dow is up at 12,979, 9,000, so that's 6.7 on the 17th. Today's the 21st. New recovery high. That's good. Your recovery high is good. The S&P is at, SPX is at 1364, up 333. New recovery high. And I'm moving this up. And this is leg D. Yep, so leg D is extending. No problem there. All right, that's good. The Qs, 1, 2, 3. The Qs are at, this is the PowerShare QQQ Trust Series. I haven't made a new high. 62.86 at peak D in the Chapman wave. And the stochastics still very good at 88%, but it is pulling back. MACD's nearly crossing negative, but it hasn't. The day's only begun. I don't want to talk about that until the day's done. My suspicion is that we are reaching an area here that is going to really test the resiliency of the upside, and you need some kind of a pullback to re-energize. Let's just quickly go to gold, and this won't be updated, but it is close. Gold's up 1270 at 1746, and there's in the daily chart. There's this is the March contract. It is making a little U-turn here, and this often forms a cup formation. It says that there could be limited upside if the 170.14 area in the GLD becomes very strong resistance. If the GLD breaks above 171.80, somewhere around there, and closes above there, that'll be very positive. But this particular point, I have to think that we might sneak to a leg B in the weekly, but that you will find some resistance. Let's go to the EUR-USD, and that is the currency pairs. Currency pair, euro-dollar currency pair, 1.33290 was the high of peak B on the 9th of February, pulled back to 1.279. So this is a really good rally if it's able to break 1 penny, 0.0001 above the previous high. That starts leg C, and that will really improve the weekly, which for the 1, 2, 3, 4, 5, for the 5th week in a row has held above the 9-period exponential moving average. Let's go to the dollar DXY. The dollar is at 79.09 on the index. It made a peak B. It's pulling back. It is under the 9-period exponential moving average with a very weak stochastic. MACD is okay, not great, but on the weekly chart it is under the 9 EMA. Until the dollar can really spike above the 80.12 area, that was the high of the 16th of February, it's going to be under some kind of pressure, at least at this particular point. Let's go quickly to the TLT, because this is really important. If the TLT pulls, yep, it is. 115.71, the Lehman 20-year T-bond fund, is pulling back, and it's under 116. If the proxy for the bonds, this is actually the 20-year, is sitting underneath. If it goes into this Roman candle, a technique that I've developed is a Roman candle right there. It looks like a Roman candle. If it goes, the TLT goes into the body of that wick. That is, if it goes to about 115.14, I'll just say if it breaks 115, it will almost certainly test 114.62, the low of the ninth. If it breaks the low, the weekly chart is making an arch formation, and that says be careful on bonds, because it could pull back towards a test of the 110.50 to 109.82 low, the 109.82 low of October the 28th, and within a rectangle formation. We are still at a high-level consolidation in bonds after a 24-year up channel and about a 31-year bull market. So this is going to be interesting. Let's go to our waiting caller. Paul is talking about RAD, which is, it's funny, I know the symbols and I always forget, what's the name again? Rite Aid. Rite Aid. Do you have a position in Rite Aid?
No, I do not.
Okay. Now, I know that you're really good at picking these very low-priced stocks and identifying them as potential pop-up stocks or good rally stocks. So this is what I'm going to make the suggestion in the weekly chart, because the weekly chart, although if we're talking about price, I'm looking at the chart. I did the chart without even looking at the price. I grab the chart and I just start labeling it. I don't even know what it is. I look at the chart and I do it. Well, it made a low at 0.85 the week of the 7th of October. It's had a beautiful run. And where does it run to? Folks, here's another technique. We're all about techniques here on TFNN. Our desire, our wish is to be able to impart enough of our knowledge, enough of what we've done over the many years to be able to give you little bits of information that you might want to use in your own technique, to add to it, to build up a portfolio of techniques. I call it the Sears and Roebuck toolbox. Well, when RAD did that little doji and broke down in October of 2007, the week of the 5th, tried to bounce back and went to the 200-period moving average, exponential moving average in the weekly chart, the week of the 14th of December, it couldn't hold it. It pulled back all the way down to the 0.20 area. Then it ran up in a 1, A, B, C, D, another peak D, but underneath the 200-period moving average the week of the 18th of September 2009. Couldn't handle it, came back, but now look at the magnetized action of it's a look back period, and it says, folks, over the last 200 days, in this case it's days, whatever period we're looking at, weeks, I've been able to rebuild my strength. I've been able to try to treat the 200 EMA not as a repellent line, but as a magnet. And for the very first time, I have the pleasure of touching that line, which it did last week. So that line is going to be a magnet. It's going to say that even if it was to rally us at 1.59, even if it rallied to 1.70 to 1.78 or even touched 180, there's a good chance it's going to try to come back to the 163 to the 157 area just to retest the line that was so important, that moving average. So this is what I'm going to recommend. I'm going to recommend that you just have a little nibble right here at $1.60. Folks, if you're listening, this is a stock that can be very volatile. It sounds like it's only $1.60. You go to $1.60, you go from $1.60 to $1.43, the low of the 13th, you've taken 17-cent hit. You've just lopped off 12% of your capital. So be very careful. What I'm going to say, because I know that Paul looks at these in a very certain way, is that if you just nibbled here, and if it took out 1.64, you add a trading position that's only for 10 or 15 cents, of which you're going to have a trading stop, and you're going to get rid of some of that, when or if it pulls back towards the low of Thursday, 1.52, that's going to be the big test to see if you want to add, or if you have to hold it a little longer. This small position does have to have a stop of about $1.39. For me, that's a big percentage move, 20% or something. But in the meantime, it's just a tiny position. It's like a starter position. So number one, you start a little bit now. Number two is you add to it the moment it breaks above $1.64, and that should have a tight stop of 1.59. And as it moves up, you just have a 5-cent trading stop. When it gets to about a 10 or a 12-cent gain, take some of that off, or make sure that the stop is nice and tight so that you make money on that trade. Once you're in the money, you must make money on your trading position, but keep that little core position, because that's the position over the next 2 weeks that's going to tell you that if it goes towards 168 to 172 and then pulls back and holds 163 to 157 and holds it for 3 out of 5 or 5 out of 7 days, that's going to improve the weekly tremendously. This might be a little bit of a turnaround because the monthly chart says it's leg C. So that's my recommendation. I hope it helps you.
That's a great strategy. I'm looking forward to seeing Tom and the group when they come to Boston.
Absolutely. March the 3rd, Saturday morning, they'll be in Boston. Folks, thank you very much for calling, Paul. And let's go to John in Philly. Hi, John. How are you?
Good morning, Basil.
How you doing? You have a good weekend?
Yes, doing very well, thank you.
Great.
Basil, I was listening with great interest to your review of the Dow, the NASDAQ, the S&P, and your labeling on the Chapman wave count. I wanted to share an observation with you and ask if you could comment, please.
Absolutely.
I'm making note here with the S&P currently 1365. That price point is right up against, at the present time, the high of 2011, the high that occurred on Monday, May 2nd, 2011. And that just it's not coincidence. The news of that day was the killing of bin Laden over that weekend.
I forgot, yes.
And there was a market reaction with an up opening on that Monday, and that scored the high for the year. So that's just a bit of history. The observation that might be as or more significant is something I recall Larry Pesavento saying. And I recall Larry got on board with Tom and the TFNN crew. It was back in 2007, I recall.
Yep.
And I recall 2007 in the summer, the market was firm to strong into June, into July, and Larry was coming on Tom's show occasionally during that month of July. And at that time, he was making the following comment. He said, early August 2007 was, from a astrological time cycle perspective, very, very key in his work. And all the details of why that was key, I can't say. I don't recall. Of course, Larry could. But the market fell, the S&P fell into that first 2 weeks of August, scored a low precisely on the date that Larry had identified in advance.
Absolutely, I remember, yep.
So it fell down, scored a low, turned on the very date, and turned back higher. Interestingly enough, the low, the first 2 weeks of August 2007, that S&P low point was 1370. And I recall Larry saying at the time, he said, if we ever fall underneath that August 2007 low going forward, very, very bad price action will ensue. And so I remember him making that comment, and he reiterated that multiple times, August, September, October, November of 2007. And then I subsequently recall you doing your analysis in November, December of 2007. I think it was late December. Your work on the monthly and weeklies, given your wave count, given the action of price relative to, I recall, the 9-month and 9-week exponential moving average.
Do you remember what I had said, that it was the very first time that the Dow had closed, December the 31st. It was actually on the 31st that it closed underneath the 9-period exponential moving average for the very first time.
Exactly.
And as a result, I had no choice but to say we are now in a sell mode.
Right, and as I say, I'm thinking of those very words of yours. And then late December 2007, selling ensued, and there was, I recall the news at the time, there was the assassination of Bhutto in Pakistan. And then the first week of January 2008, things opened up very weak. And here's the interesting thing. I mean, your work caught a turn there in December, and it was in January 2008 that the S&P fell below 1370, that
right.
August 2007 low. And Larry, right then, real time, was saying, 2008 is going to be a horrible year. And the reason he was forecasting a vicious bear market was on account of merely that time cycle low in August of 2007 being busted. Okay, so that's just the history. I fast forward into 2011. In April and that first week of May 2011, Larry was sharing his observation once again, saying, hey, S&P price has gotten back to that area of that cycle low of 2007, 1370. And lo and behold, I mean, I was just in awe to see how price went to that 1370 mark and reversed.
Right.
We're doing that right now. Question is there a chance for a turning point top here?
Okay, that's
I'm wondering your comments on
that's a great question. Hold on, and I'll be right back. Basil Chapman sitting in for Steve Rhodes. Steve and Tom are in Denver today. Don't forget, go and listen.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650, but you get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Say to myself, okay, I'm going to show, this is what I'm going to be showing next week. In fact, I'll start right now at my webinar. Next week, there will be none of these moving averages, stochastic, etc. I'm keeping it on for now because it's for the purpose that I need it. I want to have it. I'm going to show what you do is you look for the lowest, most obvious left side low bar in any chart, and then you can start the Chapman wave count. So this will be the low bar of 666.79, March of 09. This is a monthly chart. And what I do is I go and I look for the first peak. A peak is where you have a lower high bar, not a lower high bar. The whole bar has to be lower on the following bar, and that makes a peak. You have to use a lot of words to describe something that is visually a split second of looking. And then the very next high gets the next letter in the alphabet B. It pulls back, holds the blue line, which is the 200-period moving averages, touches. Look at the magnificence of a moving average that you don't even have to care about until it gets there. What happens is it holds that beautifully, and then it goes to leg C. And then the moment it makes a lower high bar, that becomes peak C. And then it goes to another high, D. D in the Chapman wave is very often where you can expect, you don't have to get it, but you can expect a much deeper and longer pullback, and that's what you have to be careful of. Well, look what happened. The MACD turned down, went negative. Stochastic plunged under 80%, so I have no choice but to put a down arrow. Does it mean that the next high has to be a brand new buy mode? No, it just means that I had no choice in the waveform, and that if there is a new high above in the S&P in the monthly chart about 1370.58, remember John was just talking about that level from May of last year. If there is a move above it, it doesn't have to close. It just has to go 1 penny above 1070.58. I start another leg. At that point, I would be calling it, at this point, I call it gray A, meaning it's a retracement rally. It's just a leg up. But the moment it breaks above, it becomes E. Because it had such a, because the pullback was not that deep, it didn't break down completely. I consider that it's still continuing the buy mode from March of 2009, and then I put slash A if this is still the leg that goes up to 70.60. So at that point, I'm saying, aha. Now I'm in an area where I could be making a double top. Where else was the S&P making a double top? It did that right back in July of 2007 into the candle of October of 2007. And the stochastic at that particular time, if you do a vertical line, the MACD and stochastic were breaking down. There was a much lower high. And the on-balance volume gave you the reversal. So I'm looking at something a little differently now. I'm looking at the stochastic acting really well, but it's only at 69%, but it is in a rising trend. On balance, the volume is in a rising trend. The MACD, so far, the month is not finished, but it has broken positive again. So far, I'm saying there's a potential for a double top. There's a potential for some kind of a pullback, not very far to the 9-period moving average of about 1281. There you go with that 400-500 points that I'd be looking at on a worst-case basis for the Dow and any pullback. I'm still I have no choice right now but to still be very positive, John, and say that my work says that until certain aspects really come to the fore, and that would be that the MACD and stochastic break down again, and the price decisively breaks under, I would have to say, last month's candle of 1258, I think that we're in an uptrend about to consolidate. I hope that resolves some of the questions you had.
Excellent.
Thank you so much. And thanks for calling. Folks, it's Basil Chapman sitting in for Steve Rhodes. I'll be back for the Money Masters show for Steve and Tom. I'll try to be 2 people when we get back, straight after these messages. And the Dow is down 8.